A new era is upon us. Pulse has taken the world by storm as the leading Web3 social media. Beyond current features like casting, tipping, inscription trading, and earning, it's now elevating to the next level, on-chain.
Soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
The Credify testnet is live, so head on over to demo.credify.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and Module X.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it just gone 1100 UTC. A big shout out to everybody joining the stream live today, as well as everybody that is watching it on catch up. Erica, Suleiman K, all the other early joiners this morning. Good afternoon to all of you. So, what are we going to do today? Well, today I wanted to do a couple of things. Now, we open up the Wednesday live show for our alt requests. Yeah, Ronnie Talks Crypto. Hello, mate. So basically, it's a case of looking over the charts that you guys want to take a look at, see if we can shed any light on things. But apart from that as well, I just wanted to kind of look at kind of dissecting some key levels. We can see here I've got the range up. I'm just going to get rid of the session breaks on here to clear it up a little bit. And I wanted to talk about how we can get confluence at these key levels, right? So a really, really good example of this is how I was bullish here, right? So Monday, I said very openly, look, we've reclaimed this level here. The way that I like to do levels is if you really zoom out and you kind of squash the chart up like this, you're looking for these key areas where, if we just have one down here, for example, I don't think the brush is going to do this very well, but you want to find areas, it is actually really good like this, right? Where you see these very clean support and resistance flips, right? So when you're looking around areas like this, for example, what have we got here? So we've got support here, you've got resistance, resistance, resistance here. Then when you zoom in, you can see, even though it looks just like a small insignificant move, right? It's not. The price comes up, you get this expansion over this level, we set this order block here, and then we take away. So what I really want to take a look at today is what was the difference in highlighting this move here compared to these, right? So let's just clear these up for a minute and we'll take a look. So that's what I want to look at today, how we get confluence at these key levels, what that means, and how we can trade it, how we can use that in our trading plans, right? So without kind of going into too much detail here, if you do have any alts that you would like me to take a look at, or we can look at Forex, we trade legacy markets as well, then please do let me know and we'll take a look at those. But before we do that, I'll just kind of go over this very quickly with everyone, just in case it's of interest. Now, when we highlight these key levels, and personally, I like doing it on, say, like a 4-hour chart or sometimes a daily chart as well, depends how much data that we have. So that's kind of the way that I use them here. Right now, these levels are never, ever, ever going to be perfect, right? So, technically, and in my opinion, I think SZ is probably the best person at drawing these out. Tom Dante as well is someone that I learned a lot from over the years. And it's a very similar kind of methodology, right? And I think Tom actually goes into really, really deep detail on this when I studied his course, right? And he's talking about the idea of decanting this from a higher time frame and just adjusting it as you move through the lower time frames, right? So if we move this to a daily now, you'll see that it will not quite look as clean. And you'll think, really, are they there? But then you really zoom in and watch the candles. Look at it here. Look, resistance, 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 the long upside wick showing us that, there's absorption there. There's pressure pushing that back down. Then we get this big expansion here. Support here. Price goes up. Support here. You don't have to be, people get a little bit kind of caught up sometimes. They're looking at a daily chart and thinking like, oh, okay, well, I want to see this expansion. I want to see this retest. I want to see this big move. Fine. But actually what you're looking for are the micro moves inside that, right? So using this as an example here, Yeah, so what have we had here? Well, prices had this big expansion, meaning that when we come back for this retest here, yeah, what are we looking for? So we're looking for confluence, yeah, confluence. So we put the green arrow in there. Now all of a sudden I'm going to drop down to a lower time frame here, let's say like the 15-minute, for example, all right? Now here, that's where the arrow is, and this is what represents the move. Yeah. So here, this is the first interaction we have with this line. The reason the arrow is over here, because we were looking at a daily chart. So the arrow here is set on midnight. It means that everything forward from here, if we get bullish catalysts, then we're trading it higher, especially when we interact with this level. Yeah. So for example, we get a fair value gap inversion here. That can be, a good trigger to go long. If we don't want to take the fair value gap inversion, well, you can look for the gap, right? The bullish gap that we have here that emerges after this, or you can wait for, say, an order block to be set. You can wait for a market structure shift, right? Or a market structure break like we have here. And you can look to be long here to liquidity targets that you predefine based on the left-hand side of the chart, or targets that you look at based on things like standard deviations, right? Yeah, certainly. Oluwazi Malogo, my friend, how are you doing? Yeah, exactly. Lots of blessings to all of you, and a big thank you to everybody tuning in today. Always a pleasure to be here with you all. So we will take a look at Aave, my friend, no problem. Render as well. We can certainly do that, Erica. So while we're in this state here, what we're saying is, look, these opportunities that we get to go long, all we're doing is we then define the times that we can trade, whether you use high volatility zones like these, or kill zones, if anybody's studied under, say, like Michael or like ICT, sorry. And other people use these as well. For me, these are slightly different. I elongate these sessions a little bit, and they're based around when the highest volatility and volume of trading is typically done in each session. So I focus on London and New York here. Lunchtime is a little bit of a dead section here. You can see you get this big sell-off here. So sideways price action here pretty much through London and New York. Then you get that big move down in New York. See, this is when we often see these big moves. And that translates into cryptocurrency as well, or it certainly does for me. At the end of the day, that's how I see it. If you guys see it different, then there's no problem with that. There are so many different ways to trade these markets successfully, and even more ways to trade them unsuccessfully, right? So all I'm doing is I'm saying to myself, right, when we're at this key level, I want to see some kind of catalyst, right? Why should I long this? Same as here, right? There's nothing wrong with taking the long here, right? Look how well it works. But equally, look what happens when we start to get under these levels. Yeah. What are we doing here when we're breaking down below these levels? We're saying to ourselves, okay, well, do the same theories apply? I mean, they do for me. Look, we have an inversion gap here, for example. This is encouraging price lower down towards a pre-made liquidity resting under Asia's range. That's what these red boxes are, courtesy of our dear friend Gio, who trades with us over at the Bird Nest. But also you can look for other areas as well, right? You can look for order blocks to be set. You can look for changes in state of delivery. You can look for bearish gaps like this one, for example, right? To short from. Ultimately, what you want to do is you're just trying to be on the right side of the bias. And when you zoom back out again, you're just asking yourself when you come in, where's the confluence here? Yeah. So when price gets above here, what I really like about this is we set this order block. So again, another bit of confluence, because price has had this big order block here, right? So if price is truly bullish here, it should do one of two things, right? We want to see it either hold this bullish gap. Okay, because what we look for here is we look for price to constantly be attacking liquidity, old highs, old lows. While we're in structure, we look for our bullish gaps and order blocks to hold price. There's a bullish gap. Does it hold price? Yes, it does. Price is going up. Here's our order block here. Does that support price? Yes, it does. Price continues to go up. Here's another order block supporting price. Here's another order block supporting price here, right? Now, I know this looks a little bit messy, but all of a sudden, by removing the doubt of which way my bias is set on a higher time frame, I can be patient and I can wait for these opportunities to come in, okay? Now, the key thing here is what happens when these opportunities fail? Well, quite simply, this is why we always say that we have a plan to trade the market both ways. Because this here, I'm looking for longs in here. When would I not look for longs in here? Well, when it's invalidated. When it's invalidated is when we close below it. When we close below it, we have a bearish close. This then becomes an inversion. Yeah, and we treat this as a very simple support resistance flip. This should be offering support. We don't care if it wicks all the way through it. There's no close. We can see the buyers stepping in here. So we just have a long bias close below and we target this low. So where's that in practice? And we don't need to move far for this, okay? Look, bullish gap here. This supports price, yeah? Support. But you can see price struggling to get away. However, it still does take the liquidity. Right, it's just this game of liquidity, the pieces on the board being moved around to these big areas of liquidity where people can target large reversals or continuation. So while we get this reversal here, what happens with this candle? Well, the sharp-eyed amongst you will notice that we also had a lower gap here as well. So we allow for both, or we move to a time frame where we find a clean singular gap and inversion, fine. So look, price closes below it here. So what does that mean? It means we're bearish here. Where to? Well, where's the next liquidity resting? Next liquidity is resting below this low, and you can see price came and took that out right here. So all of a sudden in here, we're saying, okay, from here, we're bearish. What we're doing is we're looking for price to pull back and then attack these lows. We move to a lower time frame if you're an intraday trader here. Beautiful opportunity, as you can see. What do we get? Sweep of a higher, inducement, price delivering from a bearish gap here. So same principles, right? Overlaid. Now, we can use the inversion here as the first sign of weakness. Yeah. So we say to us, oh, hang on a minute. Price isn't respecting this bullish gap now. So this isn't a breakaway. Our higher time frame is telling us to go to short down to this level. We close under here. So what do we get? Where can we short this from? Right? Just remove that for a second for clarity. Well, quite simply, there's a few places you can target this bearish gap here, or you can look at this order block here before price shifts structure. And look how well that level caps price. So all you're doing is you're saying, okay, you can be a seller in here. And how can you be a seller? There's loads of different ways. You can trigger a limit order from in this gap. You can put a limit order on the order block here. The key thing for me is now we fill this inefficiency. There's not really anywhere for price to stop before here. So it allows me to say, okay, however I'm going to take an entry, I could take the entry here. I could take the entry on a close below this. You could take an entry on the pullback to this gap, whatever you want to do. Even if you take the worst case entry here and you take it on that close, you know where you're wrong. Yeah, you're wrong above here. It's really, really simple. If price reclaims that, then the theory that you've got is wrong. If you believe this to be bearish and we've induced, we've swept people to the offside, reacted to this bearish gap, price breaks down. If it reclaims that, what do? Well, you can be pretty certain that there's a shift in structure there. So you move back to the higher time frame and you wait for these kind of areas to be reclaimed. As it plays out, look, the first point this could reject was down here. Perfect. So we didn't get the rejection. We book 1.34R. You trim a little bit of profit, move your stops up, and then you hold for this level down here. Now, what do we know from what we got on the higher time frame? Well, if we now move back up to the 4 hour, you have to forgive this looking a little bit messy at the moment. We move back up to the 4 hour. What were we saying here? Well, where's the next liquidity? Here, this low. So we're going to short this? Of course you're not. You zoom back out and you realize you're at a really key support level here, right? So you're saying, look, when you close below it, like we do here, that's when we switch short. At the moment, we're looking for this thing to bounce. And where do we expect it to bounce to? Well, we've taken liquidity below an old low. Remember, the same principle we apply on all time frames. We look for it to come to a bearish gap. The bearish gap is up here. So from here, this sweep, which we'll just put an arrow on, we look for price to return to this gap. And in that gap, unless we overcome it, close above it, then we look for price to continue downwards. And basically what you would do is you would then look to play this both ways. Okay, so, you know, a lot of people kind of have said to me over the years, it's like you kind of change bias quite a lot in your intraday sessions. I think the truth is you have to be able to. You've got to kind of be flexible. You've got to be nimble like that because, you know, otherwise there's no point marrying a bias, right? Because why would you just continue to be bearish here when you see this? You see a good reaction down here. We get our first key indication, which is our inversion, shows us that that should be resistance. It's now turned to support. We set our order block, price moves up. Even if you were a risk-averse trader and you were trading here at intraday to up here, we can then see when we get up there, we don't close above, we take the lowest of the gaps here, we see the inversion, and then you ultimately trade it lower. We would have struggled with that move because it kind of got away from us very quickly. But they're the principles that we're going to run through. Okay, so hopefully that's a very quick kind of top-down idea on that, because they're the principles that we're going to be overlaying to these other charts. So with that in mind, Bernd, hello, mate. Bernd wants to see more blood, wants to buy a little bit lower. Yeah, I know a lot of people similar to that, actually. I mean, you know, we've been calling for this pullback for a little while. Look, it is what it is, right? I think the key thing to removing emotion in this market is to just, you know, be comfortable to trade it both ways. That I know there's a difference between people that are investing in this market versus people that are ultimately, you know, intraday trading it or swing trading it. But if you're investing in the market, then these conditions, for me anyway, become more exciting than they do worrying. I think it's all to do with the time that you spend in the markets as well. I remember my first bull run in crypto, and the whole thing blew me away. I had some traditional market experience. There was nowhere near the volatility or the speed that you got in crypto. And one day you're sat there feeling like a genius, and the next day you're there feeling like the world's biggest idiot. But those lessons are super, super important. Anyway, this was our target. Okay, 57,128 flat, and then down to 56,682. Again, this is a simple support and resistance level. This was the resting liquidity under this move. Quite simply, on our session on Monday, I said if we close below this gap, again, bullish gap at the time before this played out. So we set this bullish gap and we say to ourselves, right, lovely, we've got the immediate liquidity resting above. I also really like the fact that we had this liquidity resting above it that goes through a gap. Yeah, so really, really good liquidity pools. Excuse me. Also equal highs, right? So, or relative equal highs. These may be a little far apart, but there's still a kind of cluster of liquidity pools, and then this higher up. Look like there's a lot of liquidity to draw this higher. However, the technicals aren't, you know, are far from everything in this market. You have to accept that news catalysts and powers that be can change these conditions very quickly. So we could have just been very pig-headed here and say, well, all we're doing is looking for longs, right? How deep do you look for these longs? How far do you let price go down, right? Fine. Maybe that's the move, which is great. If we get that move, I know we're a bit lower than that now, but happy days. Why not trade this leg down, though? If you understand where the liquidity is resting, liquidity is here. This is the low, right? The untapped low. What does every trading book in the world tell you to do? Fine. Okay. So I'm long from here. Where am I going to put my stop loss under the swing low? I do it as well. It's the nature of it, because you know where you're wrong. Yes, you can get caught in stop hunts, etc. But the truth of it is that's where liquidity is. So with the liquidity there, what do we need to see to give us that impetus, right? To give us that conviction that this is the target, not this. Well, I'm all over this being the target at the moment, right? My expectation is still for price to draw down into here and take that out, unless we close below this, yeah? And the other caveat is you wouldn't want to see this close and also take the swing low. You need the target to be intact, right? So there we go, decent reaction. So let's look on our lower time frame chart. All right, what do we get here? Okay, quite simply, nice reaction in here. We can look for intraday long trades here, but not when we're trading up into a bearish gap. We need to invert that first, and we would need to shift structure in the process, right? Then we would quite simply look for the inversion, look for price to come back, get that little sweep, and then we charge it, trade it higher, okay? So then we kind of see, okay, well, how is price playing out here? We don't quite get that, all right? Now, all of a sudden, you're in a position where you're like, okay, price has already dipped into this gap, yeah? Now, if something's truly bearish or truly bullish in this case, we probably expect a bit more of a move of impetus here, right? Violence is the wrong word, but you want to see that explosive higher momentum move, price dip in and then pop, right? Well, we don't get that. So let's just turn this off for a second and say, okay, we didn't get that. So what do? Get the hell off that time frame. It's doing you no favors at all. You'll just drive yourself mad. And now you move on to the next time frame and you look at that for the next close and you say, okay, no problem. We're still looking for longs, right? Everybody in agreement? So what happens here? Well, okay, what we do is let's play it out a little bit, because until we get the 4-hour close below it, okay, so we can see here, we do get the long. Where from? From this, all right? And again, you can sit in here and you can look at your microstructure and you can say, right, there's the high, there's the breaker line straight away. All right, the last swing high, price comes down, takes liquidity below this low. This is the high that purges out. Price then comes above here. Look how it uses this as a base at the same time delivering from this bullish gap underneath it. You see how these things start to align. Now, don't get me wrong. This I know would put a lot of people off, but these moves quick down are often quick to retrace as well. And something that I will do here is I'll say, okay, let's measure the top to the bottom of the recent move. And there's an expectation that price moves up here in this part of the move. So being long from here, from our breaker line with our stops below the prior swing low here, or the order block, depends on what your particular strategy is, up here into this is 1.1R, fine. Even if I said to myself, I'm willing to take that trade on and secure my stops there, yeah, fine, maybe I get break even here, or you hold with conviction higher up. That's how we look at it. Now, ultimately, our bias here is actually incorrect, right? Because, or not incorrect, it turns incorrect very quickly though, right? Because we're then saying, okay, well, we're long in here. Whether we've got a little break-even trade out of that, whether you booked yourself 2-3R, I mean, that was a 4.4R trade there, okay, not to be sniffed at. However, do we then just keep longing this? We say to ourselves, well, we want to be in the long from there. You don't really want to be climbing into the long position kind of here and here, because if you are wrong, you've got a lot of downside. And if you're right, you've not got that much upside. It's just purely from a risk to reward perspective. And you've got to ask yourself, excuse me, would the major accounts be doing this? The major players, and I don't mean people on Twitter and all of that. I'm talking about hedge funds. I'm talking about big commercial institutional entities. Are they really going to be buying here? I don't think so. So you wait for price to play out and then boom, you just get this brutal move to the downside, right? So now we've done that. We also inverted this slither of a gap down here as well for the eagle-eyed amongst you. So now we do that, that becomes an inversion. The inversion means we then want to target down here, right? So then again, what we say is, okay, well, what do we need to do that? Well, quite simply, like we said before, right? You either want to see a breaker line level. So for example, you have a move to the offside here, taking liquidity above this. This is the swing low that caused that move. So you can wait for that to be broken below, right? Unless you get another move like this, for example. So you're looking for moves to the upside. Here's another really good example of that as well. So you look for the low that took the high. So that's the sweep of the high. This is the low. All right. And then you look to be short below that. And actually, it's going to take forever to play out on that time frame, isn't it? But okay, because you have an idea where the liquidity target is right now. Look, even if you're wrong here, right, even if you take that short too early, and you have that conviction on where to get back in. So maybe you lose 1R in here, but then you make 2-3R on the way back down. The key for me is I then wouldn't want to be short around these areas here, because you're running areas where we expect to at least see some kind of reaction. As we get here, price tries to get back above this level, but ultimately gets held in this bearish gap right here. All right, and then that tells you, it gives you an indication that price is looking to squeeze this lower. So hopefully that kind of gives an idea of how we're looking at liquidity moving, how we look at this from a perspective of liquidity into where we are right now, okay? And one of the things that I'm aware of is that we've still been capped by this big bearish gap here. We do have this equal highs resting above us, which are a really, really good draw on liquidity. But ultimately, one of the things that we have done here is we had this bullish gap. Let's get rid of that for a moment. So this bullish gap that was supporting price closed below here and has now been retested here. So for me, the likelihood is that price is squeezing lower here, with the obvious targets being these smooth lows here or the low which was set during Asia. However, I would still show a bit of caution around here because we are so very low in this large sell-off. So we had the original kind of consolidation and reversal here from the uptrend. Price is now sold off, accumulation, distribution. Maybe this is another phase of accumulation before we purge lower again, and then we would ultimately zoom out and check the charts. Yes, Nit, we are. Trade Club is on later. So in about 45 minutes, we will be hitting the live trading session. Today's session is going to be on crypto. So we're going to do some scalping and see what we can get on there. I don't know if our lovely Erica is still on here. I think she will be. Erica, is it possible for you to share that link with Nit, please, so he can join us later on? Look at that, reacted before I even said anything. What an absolute star. So, okay, let's get off of this now then, and let's look at Aave. So, okay, yeah, interesting here when we were looking at Aave before about the inside bar, right? Look, you really, really do see this, right? This is the mother bar, okay? So we're looking at this on a weekly scale. So as price deviated here, when it climbs back into the range, what do we look for? We look for this area to offer rejection, and ultimately that is what we got. Yeah, not really much else to say on that, was it? It's still kind of holding the inside bar, which is fine, but let's group this and put this away. So that was probably from Monday's show, wasn't it? Which was the 2nd. Yeah, God, the 9th already, aren't we? Wow. Where is this year going? Anybody here going to Token 2049 over in Singapore? Going to be heading out there with Burb and some of the TBN fam in a few days. Going to be really cool. Going to stop off over in Dubai for a couple of private events that we're doing over there, and then on to Token 2049 with a load of other legends. I think it's going to be a really, really good year over there. So just to show you the thinking on that very quickly, this was our inside bar pattern. Huge mother bar here, deviation at the top, back inside, look for that retest and that sell-off. Very, very kind of basic principles there. Let me just pop them back in here for a moment. We'll start with a nice clean chart, right? So here we are on Aave. Now, what's quite interesting here is Aave actually held this up pretty well, actually. I have to say, look, what happened was we swept some liquidity above this high. Natural to kind of see a pullback at those points. We do look for an inefficiency in here, meaning that we're looking for a gap. Yeah, it's going to be my first time out there, actually. I've traveled through Singapore a few times, but to get to places like the Philippines and Bali, etc., I've always wanted to spend time there. A friend of mine, who was a currency trader in London on the stock exchange, who I lived near for a long time, lived out there for 8 years and just absolutely loved it. And I know a lot of people that have been out there that said, you've got to get yourself to like Raffles and places like this, you'll just be blown away. But apparently the street food is the real kind of is the real thing that we can't miss out on. So we'll see how much time we get. These events are a lot of fun, but as rightfully so, they're also such a brilliant, business opportunity and networking opportunity as well. So what is it doing at the moment? Well, this bullish gap continues to hold price here. Now, this price action is very confused. To be honest, I don't really have any answers for you guys with this. Typically, if I see this, the change in state of delivery above here, right, then I'm looking to be bullish. Then you see immediately that this big bullish engulfing candle here that sets the order block then gets crushed beneath by a bearish engulfing, changing the state of delivery to the downside, and then price just draws higher. So overall here, I would actually be looking bearish at the start of today, purely because we had this, right? So this is a good example, actually. I'll run through this very quickly with you about how our bias can sometimes work for us and against us and what we do in those situations. So here, I'm at a little bit of a loss, right? Because we've a higher high, a higher low. Then we've done kind of a lower high here. It depends how you kind of read your market structure. I keep it very simple because I'm a very simple creature. I just go from swing high to swing low, right? So lows. Obviously, we've got this one here as well, but then this one pushes above it. Then this is a swing low. Why? Because it's flanked by two higher lows. Then we've got that because that's the next swing high from there. So that would then mean that this one here is then the next swing low. I'd need to check on the charts to see if this is higher than the other, but then we'd be coming into here, and now we're kind of coming down. So you can see it's just quite ugly. Higher high, higher low, lower high, but a higher low. Now a higher high, and it's coming down to set a lower low. It's just a very confused market structure, right? So we can use the lower time frames to make that a bit clearer. But based on the daily, the reason that I would be favoring shorts today would be because of this close under here. Okay. up candle, close below, large body candle like that, setting an order block or at minimum a change in state of delivery. However, when we see that, we're typically looking then for price to just kind of run out the next liquidity target, which is this. I wouldn't be shorting in this because it's a bullish gap. Yeah, invert this, close below it, and then we have targets here, here, and here. So how does that work then? Let's take a look at it. The opposite was true here, right? When we closed above this, that means when this candle closed, we were looking for bullish trades on this day, right? And we'll see how badly that went. And don't be put after, hopefully, this kind of stuff. I'm just being honest with you on how I would trade this. I don't want you guys to think that I would kind of have a system that wins every trade. You see that a lot on places like Twitter, but you don't see that anywhere near the professional trading floors, I can assure you. You know, it's all a game of probability. So hopefully this kind of opens our minds to saying, okay, help with conviction. If we lose a trade in here, we lose a trade, right? But actually this looks pretty ugly, right? It looks like our bias is all over the place on a daily basis. We're looking to be long on the biggest bearish day, and we're looking to be short on what looks like a really, really bullish day. So let's go down to like a 15. So I would move from a 4-hour chart. That gives me my bias. Then I'd move down to a 15-minute chart. Sorry, I've got to turn the session breaks back on for a minute because the charts just look weird for me on the lower time frames without it. So moving in here, we're just saying to ourselves, okay, well, where does price give us the opportunity to be bullish in here? What's it doing? Look what it's doing, right? Lower highs, lower lows. It's just grinding down until this massive drop. Yeah. So you just remain patient, right? You just say to yourself, okay, fine. When do I have the opportunity to go bullish? Actually, towards the end of the day, you set this bullish gap in here. You're very, very low down in the move. You're driving into this consolidation here, right? So actually, for me, you're thinking, okay, maybe there was an opportunity to go long there. Or you just got a day that you sit on your hands, right? Fine. So we were bullish that day, right? And that didn't really work out very well for us, did it? But we didn't lose any money. Ultimately, the end of the day gave you a trade. That's why so often in this game, the name of it is patience. So what about being short here? Where did it give you the opportunity to be short? Now, when I say that, to be short, I want to see some kind of, I want to see a nice big bearish gap, or I want to see a key high taken out. I'm not even really that interested in that high, even though it's like an abnormal wick, meaning that, we saw the size of that sell-off. I'm kind of saying to myself, well, I want a key high, right? I want the high of the prior day, which here we can see is actually Asia's high, right? And the prior day high. So now you're saying, okay, we actually have a decent liquidity pool here, right? So we go in there and we look for shorts on the lower time frame, and you say, okay, do we get that kind of structure break? I mean, you can see, I'm not saying we've got a lot of intraday traders here and stuff, right? But, for me, seeing things like this, and then, these lows here closing below, you can see all the resistance that's coming into here. Even if you wait for a cleaner structure break here, you can trade that gap lower. Ultimately price is fractal. So you're just looking at these on different kind of levels. So where does that leave us with Aave at the moment anyway? Well, for me, it's very, very confused. So I like using the 4-hour here to gain a little bit of clarity. And we can see we're holding this. What I would say here is I would definitely wanted to have seen this inverted. Now, if this was on a 4x pair, or if this was the NASDAQ or something like that, for example, then this inversion here, and actually, let me just check. Maybe we didn't get it. Yeah, okay. If I really zoom in, you can see here, price just sneaking its head above. Yeah. So ultimately, we inverted this. Remember, our inversions are the first sign of a resistance turned support here. We also took out this wick. See, we've got a large wick high here. So we can draw that across and expect that, or monitor it to be support and resistance. So actually what we would look to do here is be long from London session this morning, and we want to target Asia's high. But from Asia's high, we probably want to flip that bias to being short. How does that play in with our bias here? That, remember, on the daily scale, we're bearish in here. We still want to be bearish from key levels, meaning that if we invert this, yeah, while we're in this, we want to be bearish from here. It didn't give us a setup, right? We'll check it again on the lower time frames, but price basically just did this, just ground right up. However, now we've taken a key high. That's where we would look to be short. So that's where we can trade the market both ways. We can take the long position once we close above this, because we believe this is the next key liquidity area. So short, probably reduced position size, intraday longs into here, followed by looking for those breakdown patterns and then shorting it back. Okay, so what does that look like on here? So where's the time here? 9 o'clock. Yeah, 9 o'clock is here. So you can see you got that move. The move was just a gigantic rocket of a candle just after the open. Yeah. So fine. We could say, oh, damn it, we missed the bias in here. We didn't get this move. We saw the consolidation. It's frustrating because we thought that we were going to go up to here. We don't have to worry about that. We can say, well, now we're up here. Actually, remember, our daily bias up here was a gigantic red arrow telling us that we wanted to go short here. So this is then when we can look for those short plays, right? And what have we got? Higher high, higher low, lower high here. There's the low. Short below this. Yeah, nice close. Enter it here. Again, where are we looking for a reaction? Well, we're looking for a retest of this. If this is the inversion, and also if price here is going to hold, for example, well, all right, if we're moving back to a bullish state of delivery here, I don't like the particular time of day. All right, because we're just after lunch and we're before the New York Open, but there we go. We're looking at our breaker line methodology that we looked at before, quite simply. This is the high that swept the low. If we're holding support here, now obviously we need to factor in the fact that on a daily basis we are bearish. So we would take some reduced position size longs here, and then we would look for the nearest key intraday targets, right? Where's the resting liquidity? Where do we think the price is going to kind of move up to here? Obviously, you then need to check this for risk to reward, because you would need to really be doing that. And you would say to yourself, all right, is that really okay, you've got a 1-for-1 there. That's okay. Now you need to remember the risk here is that you're trading against your kind of high time frame bias. So you either don't take the trade at all, or you take the trade with a reduced position size, or you wait, you make sure you've got a great percentage in here. So in fact, if I use my dear friend and fellow Birdnest member Resume's position size calculator here, right, and what we can see down here is based on the account. You can change whatever that is. I have it set just on average, it's kind of a 10K account. You can change that to 100, 1,000, whatever. Set what your leverage is, the risk percentage. I don't like risking more than 2%. Gives me, say, on this particular occasion, $200 for my risk. But I need to also factor in fees. So what this allows us to do is look at our position size, which is 13,506. If you're intraday trading here, and this is the stuff we cover at the Nest a lot, especially in our live trading sessions like we'll be doing later today, then you need to know. So say, for example, good example here, right? Say, for example, you'd secured your stop loss there because you were thinking, do you know what? I'm counter risk trading. Do I have enough in this trade to secure my stops here? Well, okay. So if you do, yeah, you now need to know, all right, well, as price gets to there, right, what return have you got? You've got $83 at that point. So on a $13,000 position, you might be wearing like 1% of fees on that, 0.1%, sorry, of fees, which would be like, well, in fact, let's do it exactly. I don't want to be too vague in these things because they have a huge consequence. So let's get the calendar out. By the way, just got the new iPhone 5, really impressed. Below kind of 95% battery already. So 13,506 times by 0.1%, yeah, as we can see, would be $13.50. So okay, so it costs you $13 there to move your fees up. That's okay. You don't mind that, right? You kind of say, all right, well, if it cost me $13 and I've got $70 left in here, you've got out for nothing. Yes, you've lost the trade, but at least you gave yourself the upside there had it stayed in. Either that, or you hold this with conviction and you say to yourself, right, well, this is the first place that I think price could reverse. So I'm happy that I've reduced my position size, but if we get to here, I've got $200 in the trade. I know my risk is $13, so $213. Remember, it's your stop loss plus your fees. Yeah, that's the thing that messes a lot of people up, especially when they're intraday trading. Okay, so, and I know this is an intraday example, right? And by the way, anybody that's interested in joining us over at the Nest, can do so, you can find tons of stuff down in the description. You can see the membership options. You can come and join us for free. Yeah, there's loads of different bits you can get on over there. But basically, if you do come along, this is one of the indicators here that you can get for free as well. Our dear friend Razun builds them. Now, obviously, we're looking at this on an intraday basis, right? But this is just kind of an idea overlaying the principles of support and resistance, right? Looking at these key levels, how price interacts with them, making sure that we're managing risk, understanding that, we expect support in this area, but we understand the risk behind our decision making. Ultimately, we'd be targeting this higher, but we need to remember on a daily basis, what did we tell ourselves? That we've got an intraday basis of a daily basis, of bearish. So we need to show caution here. However, we also want to respect our structure here. And what we can see by these higher time frame levels is just how kind of price is in this very, very strange kind of state of flux at the moment. And that kind of brings me on to my next point. And we are going to cover render as well for our lovely friend Erica. But one thing that I just want to cover with you guys is looking at how we can kind of foresee some of this volatility. All right. So we're going to take a look at our calendar, right? So really simple. You can use this on things like Forex Factory or Baby Pips. There's some others as well. Now, this is all relating to what's known as red folder news, high impact news events that there's an expectation that they move the market. Now, this is much more aligned for traditional markets. Forex, obviously stocks, our indices, indexes, our equity markets, as well as indices and indexes. So I'm looking typically for US news, right? And we can see, for example, yesterday we had ISM manufacturing. Let's just refresh this quickly and get the figures on. So ISM manufacturing came in pretty much on what there was previous was expected, 46.8. They kind of upgraded that to 47.5, came in at 47.2. So not too much kind of shock to the market there. However, today we see we've got the jobs openings, jolts. But then as we move through to tomorrow, this is the kind of big one for me. So Thursday, ADP, non-farm employment change, unemployment claims, and then ISM services PMI. What these do is this gives us a snapshot of, okay, how's the economy recovering in the US? So out of the non-farmer employment change, how is that? Is that good? Is it bad? We can see at the moment they're forecasting that to be quite good. So more job opportunities than less. Last time was 122. They're projecting 143. However, if that comes in under, unemployment claims are up. You can see that they fixed them the same, 231 and 231. If there's more unemployment claims than they assumed and services, are down as well as employment change, that's the kind of thing that can put a lot of kind of anti-risk pressure on the market, meaning that we see this pullback in things like the NASDAQ and the S&P 500, your real kind of technology or risk stock heavy indexes or indices. And that typically kind of follows on to cryptocurrency, which is like a beta risk asset. Okay. So as we look at this, at the moment, very, very unclear here, right? I think I'd be more comfortable being in short positions from up here, like we said, purely because of our daily bias. I think the 4 hours is a very tricky one. I think the 4 hour gave us a great intraday long up into here to then respect our short bias, because we would have wanted to be short in here. But remember, this did nothing. This big candle just went up and up and up. Now we've taken this higher. We then want to be looking for this to be short again. However, if we had a bullish bias down here, this long trade would have been perfect, because we would have come in, we got the entry trigger, and we would have been able to trade it higher. As it was, if you'd taken that risk trade, thinking that this was pushing higher, then great opportunity to move back and say to yourself, okay, why was I long here? Remember, lower low, lower high, lower low, higher high, but then a lower low. All of a sudden, you're saying market structure's confused, steering bearish at best. It's certainly not bullish. And then you can say to yourself, right, fine, I just had the wrong high time frame bias here. So if you lose the trade, you lose the trade. But what it allows you to do is then position yourself to get back in line with the order flow, with institutions, with hedge funds, with where the major players are trying to position these markets. So anyway, rattled on enough about that. Hopefully it's kind of at least been a little bit insightful for you guys in terms of how I look at the markets. Let's finish up here on render. Let me just have a look in the comments just in case I've missed anything here. No, all good. Okay, I'm actually going to zoom out a little bit more here on render and just go to a weekly play. Now, yeah, I thought so. When we looked at this, it did a really sneaky move, and we do see this a bit more on crypto. This inversion here, I really liked this. I'll tell you for why. Firstly, before I say that, what I didn't like is the fact we left this low. And this low was right underneath it, making them relative equal lows. A huge expectation for us to take those out. So on a weekly scale, once you set this, you look for price to return to this area here that was bearish at the time and then sell off back down to these lows. Those lows start, by the way, along with this low now as well, right? So you look, there's so much liquidity there, starting at 3.410. However, when we closed above this, remembering, how I look at the market in terms of inversions, then my expectation was price to be moving higher. However, now we've violated this back down to the offer, this becomes irrelevant. And ultimately, although we haven't really changed delivery in any course or way, the key liquidity targets for me here are to the downside. So how does that play in on the daily scale? Well, we can see actually not too bad. The inversion here on the daily scale worked really well. So we had this here, price got closed underneath, retested it beautifully, and is then coming down to fill these inefficiencies here. I would still be very surprised to see those equal lows intact. I think that's going to be a key draw on price. And also on a daily scale, we've now just set this order block here. It's not a high probability order block, right? In terms of when you're learning about order block theory, do go and study different people. There's some amazing minds out there in terms of order blocks. This here is obviously an important order block. So price came back down here. For me, a key order block is one that is, in this case, where I'm looking for a bearish order block. We can see that we delivered from this bearish gap here after taking liquidity from the high, and look at the move that followed it. A large impulse move to the downside. So when you use something that comes into a key point of support or resistance, which is why I'm not too keen to label this a high probability order block in here, because it just didn't really react from anywhere. This is kind of a bit of a nothing low. Why take that and leave these? Often when we see these failure swings, not a swing failure. So a swing failure is where you have a liquidity level like this. Price gets above it, ultimately comes back down underneath it. That's a swing failure. A failure swing is when price comes up and leaves a high very close to it and trades away from it. And very often you see price come up and then kind of take out both the failure swing and the main one. And we can see that with this cluster down here. So with that in mind, what are the plays? Well, whilst we're holding underneath this, then I do think that the play is to look for price to draw up into this order block and then ultimately sell off down into these lows. Let's take a look at an hourly on this one, because the hourly sets a very nice kind of framing for the daily. We can see that during London here, we had a decent reaction. We've taken out this high here. And we've kind of drilled up here into this bearish order, into this bearish fair value gap, sorry. So as we look at this here, what we haven't done is change our state of delivery, right? So on the hourly, we can see we've got our downside target here. And I would also add this one in here as well, which is Asia's low and also the low of day. So if you want to be risk averse on this, you could wait. You could say, here's the up close candles. What you want to see is price close below this and give you that little bit of impetus and kind of directional bias then that price is ready to move. Or if we look here on the 15-minute, we can see we don't really have any inefficiencies in this move. We want to always give more weight to the higher time frame, right? So if there's an hourly order block to be set here, you want to see that over, say, a 15-minute one. But looking at this here, we can see prices reacting off of this bearish order block here at the moment. So maybe that's what's drawing that down to that point here. What I would say is if we draw a box over this OB, this is the area that you want to see hold if you're a bear. So you just want to start seeing these kind of moves to the downside now. I don't think there's anything particularly clean in there at the moment. I mean, obviously, you'd trade this on a perpetuals chart anyway, so it would look a little bit different in terms of the bodies and the wicks. However, what I mean by there not being anything overly clean here is I do like the fact that I don't actually. We kind of filled that gap in, not really had any kind of major sweep. It does look like it's kind of heading down here. We've got equal lows here and equal lows here, again, courtesy of our friend Gio's indicator. But I think if we see this move as you get it, within our key time frames, so looking at the high volume, high volatility areas here in London, then you can see we look for that sharp move to the upside. We get that here. A sharp move up here to attack that liquidity that's resting here. Price breaks down, and then we're underneath the key resistance level here, and we're pulling back into a a load of bearish gaps in here, right? So that's a great place to short this asset. So that's the kind of thing that I would be looking for here on render. It's very hard not to be bearish on this at the moment, I think, until we start reclaiming some key levels. So, you know, we need to be aware that we've got this massive 4-hour gap above us here as well, right? So looking at this, which again is where price reacted from here, giving us even more confidence as to why we would want to be short this asset here. However, we have had this purge down as a long downside wick here. So I do think it's smart to look for some confirmation in here before we go short. Price could be coming up into this. If we're wrong, or if I'm wrong, I just want to see a bullish close above this. And then ultimately, I think the price is going to start attacking these highs up here. All right, guys. So look, I hope that wasn't too convoluted for you. Just trying to give you a little bit of a decant on how I kind of look at the markets moving from kind of key liquidity pools while we're still looking at key areas of support and resistance. So applying those principles here, and you're saying to yourself, okay, well, where's the key SR here? I think we're actually on it. And why would I say that? So if we use that as our support resistance level, remember, like I said to you, yeah, when you're looking for these, look for somewhere that has rejected price, that price has then established itself back above and had that move. And that's the level you're interested in, right? That's kind of what we got here. You need to zoom in here, right? But look, I'll just do it with the pointer very quickly. Support, flip to resistance. Resistance here, price gets above, finds support, and it does run to the next liquidity. We get underneath resistance. That, to quote the legend himself, SE, is a deviation. That's a retest. Price sells off. Even when we look down on the very candles themselves, just a little close above it, and then look at the support that this holds. So now we're back down at this level. This could be a deviation underneath before price kind of looks to move up. So I think price closing back under this level would then give us that indication that it's maybe ready to move a little bit lower. Okay. So anyway, remember, you can find all the details down in the description if you want to come and join us over at the Nest. We've got tons and tons of education like this. You know, our mission is to really just empower everybody with the education and the tools needed to pursue their financial freedom, like a lot of us ourselves have done. We all come from a whole host of different backgrounds. I myself have been professionally trained now for about 6 or 7 years, was doing it before on the side before that. But, you know, took a really, really big leap to get out of the business world and pivot into this. And I've never looked back. One thing I would just say for anybody that's interested is the key to that, as a lot of people ask me, was really, 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 really hardcore dedication. I wasn't going out. I wasn't, you know, going out drinking with friends. I was using every minute that I wasn't working to get in my head in the charts, and not just studying anything, finding your niche, what really speaks to you, what can you, when someone shows you something, does it really click? And if it does, you know, research that, dive deep, try and connect with people, surround yourself with the very best people you can, cut away all the noise, cut your Twitter account right back. Don't just listen to everyone, find the very best people that align with the type of trader you want to be and just go super, super deep into that. And the other thing is to find yourself a really, really good community. All right. So if that's us, fantastic. You can find the information down there. And if it's not, absolutely, you know, blessings and Godspeed to you all. I will see you legends again on Monday for our live show, which will be again, I believe, at 1100 UTC, and again on Wednesday. And for the rest of you legends that are already with us over at the Nest, I look forward to seeing you this afternoon in about 20 minutes for our live trading session. Have a fantastic week ahead, guys. Do trade safe. Please do remember tomorrow about the red folder news that we're running into. A lot of key catalysts in there that can move the market. So I look forward to seeing you all next week.